Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you again, ladies and gentlemen, for joining us on another beautiful Sunday to talk about Bitcoin. We have a lot to go through in an all-star panel, but before we get into that, guys, we are screen sharing our CryptoCast.network website, where you guys can find our YouTube, Twitter, Instagram, RSS, and iTunes feeds. We have some merch on there too, and if you guys really want to support the channel, because this really is a community-supported YouTube channel, we really appreciate it if you guys could give us a donation there, as we are sharing the Bitcoin address for that. And with that aside, I do want to plug a couple conferences, guys. And of course, remember, we never get paid for plugging conferences or anything here. Again, this is a community-supported YouTube channel, but we have some friends in the space, and we would love to plug those guys' conferences. So we have Mr. Tone Vase's conference, the Understanding Bitcoin conference over there in Malta. It's going to be great, guys. It's going to be a tech conference, a developer conference, but designed for regular people. So you're going to be taught by some of the best developers in the space. It's going to be really, really great. A lot of great instructors on there. We even got Adam Fisker from Wasabi Wallet going there. So I'm really looking forward to seeing that. It's going to be really fun, guys. So check that out. There's still a bunch, about 36 tickets left there at 0.1 for the cheapest ticket. And then in addition to that, guys, the same weekend, except online, we got another conference here. This is a completely online conference called the Lightning Network Boltathon Conference. And that is, again, April 5th through 7th, just like the Understanding Bitcoin, April 5th through 7th in Malta. And the Boltathon is April 5th through 7th, but online. And that is at boltathon.com. Guys, you got to check this out. It's going to be really great. It's going to be a lot of instructors on there talking about Lightning, and a bunch of the people from BTC Pay Server. And even a guest on the show today, Pierre Richard, is going to be teaching some stuff there. So I highly recommend it, guys. It's really cheap, really affordable. And you're going to get taught from the actual people working on this stuff every day. So with that aside, let's go ahead and stop the screen share, get up our notes for our for your guys' section that we do every week, the quick bit section, where we go through some of the week's news before we get into the topics. So let's go ahead and do that, guys. A few things that I'd like to share. So we got since August 1st, I guess, speaking of Wasabi Wallet, since August 1st, guys, 2018, Wasabi Wallet has now made over 20,000 BTC fungible with over 2,400 successful mixing rounds. So this is really great, guys. Again, privacy at the transaction level, really, really great to see. And I expect that to continue to grow as well. Then we got the Bitcoin Lightning Network wallet. Where is this? By Akumi Gortsky is now, this is interesting, guys. You got to check out this link, because there is this new wallet that automatically auto-rebalances channels in order to help you pay large invoices when you have a smaller amount of funds spread across many channels. So that's pretty cool. Auto-balancing is a feature we're going to see come to a lot of wallets in the future. Then a new article by JP Thor, analyzing Bitcoin's true market dominance. This is really cool, guys. He takes into account all of the different coins and all the different liquidity, and he created a new metric, to go by. Instead of just regular market cap, he did a volume weighted cap, and it's very interesting. And if you check out the article, you'll see that it's much more intelligent than just the stupid dumb market cap, which can be gamed to infinity, guys. And with that research, he found that Bitcoin, of course, has over 80% dominance on the market by that volume, or by that metric. So check that out, guys. Volume weighted cap. Very interesting. And then our friend is back, guys. Mr. Renegade Investor is back with another great video. This guy's great, guys. He puts out a bunch of videos that have to do with major motion pictures that explain Bitcoin to people. And this one is going to be about the Starship Troopers movie. So very, very cool. It's called Fiat Troopers-The Scourge of Bitcoin. Really interesting, guys. Check that out. Really fun. And then we got another company entering the space. So we got companies like Azteco and Bitcoin Fast are now joined by Binance's efforts to make Bitcoin more available to regular folks by making Bitcoin purchasable in the form of vouchers located in gas stations and grocery stores and other everyday retail outlets. So that's really cool. Another company, Binance, we have Azteco, Bitcoin Fast. Now Binance is going to create these Bitcoin vouchers that allows people to buy Bitcoin really easily. It's really one of the greatest ways to buy Bitcoin. So check that out. And then we got three different Blockstream stories to go through real quick, guys. Really interesting. They just keep kicking ass. Yet again, I say it's hard to not be a Blockstream fanboy right now, but they just released their satellite messaging API that's now live. Check that out. They just relaunched and rebranded their green wallet. Now it has 2FA by default and options to use wallets like Trezor and Ledger. And it really has some cool, distinct features in there where you can see if it's verified or confirmed. So it's confirmed if you're not running your own full node, verified if you are connected to your own full node. Very interesting there. And then they also launched a new multi-platform desktop wallet for Liquid, guys. So if you are interested in checking out Liquid and creating some assets on there, playing around with that, they've now released their Liquid core wallet to do that. So check that out, guys. Very, very interesting. And finally, the very last item here today, we have after 1 year. After 1 year of studying Lightning, Mr. Rene Picard has proudly released 200 plus slides explaining the bolts standard and then various other parts of the Lightning Network protocol for his book, The Lightning Network Book. But due to health issues, he's going to be in the hospital until June. So we wish him all the best. Rene, thank you so much for all your videos. We wish you the best, man. From everybody here, at CryptoCast and everybody in the community, man, we wish you the best. We hope you are off to a quick recovery, and we hope to see you soon back in June. So with that aside, guys, let's go ahead and introduce our amazing panelists and get the topics going. So first, we got Mr. Jack Mallards, creator of the Zap wallet. Jack, how you doing today? Got to unmute.
What's up, man? Thank you for having me back. I'm doing well.
Yeah, Jack. I mean, we hear so much stuff from you. It seems like every couple months we hear something new from you, Jack. So I can't wait to also hear what you got going on, man. I was glad to have you here. And anybody from the Mallards family on the show is going to be kicking ass, guys. So we got Jack today, but very good. Then we got Mr. Pierre Richard. You guys all know him from the Node Launcher, and of course his super successful podcast, the Noded Podcast. Pierre, how you doing?
Doing great, Vortex. Thanks for having me on.
Yeah, man, glad to have you back. Lots of stuff to talk about. Interested to see you on that Boltathon conference. I hope you guys do well with that. Again, that's boltathon.com, guys. Check that out. And then joining us again, Mr. Udi. He's joined us a few times. The Lightning Network expert these days. Udi, how you doing?
No, I'm not an expert of Lightning or anything, but about okay. Thank you. Yeah, it's really great to be here, and I'm super happy to be on this panel too because it's two great guests. So yeah.
Yeah, man, awesome. We love panels. This is what this show is all about, the Bitcoin News Show, the weekly show where we do a panel about this week's Bitcoin news. So let's go right into it, guys. We got the first topic here. The Lightning Loop has just been released by Lightning Labs. This is really, really interesting, guys. I believe it's an additional protocol for Lightning. So it essentially lets users empty Lightning channels without closing them. And this is pretty powerful. And to be honest, I've always kind of seen this coming. I've tried to tell people that eventually channels, guys, they're going to be mostly in the background. Eventually, the goal is to have them, auto balance and just be in the background. You don't even have to worry about them. But there's a lot of FUD out there. So I'm glad we're talking about this today. But this is a pretty exciting release from Lightning Labs. Again, Lightning Loop. I want to hear more about it from you guys. So Udi, let's go with you first. What is your interpretation of this Lightning Loop? Because this is pretty interesting. I believe this is built off of submarine swaps from Alex Bosworth over there.
Yeah, so my understanding of it, which I hope is not too shallow, is that they use submarine swaps, which is indeed an idea by Alex Bosworth. And what submarine swaps mean is that you can swap funds from your off-chain channel with on-chain funds. Actually, it can be Bitcoin or it can be anything else, but let's say it's Bitcoin. So you can swap between them without trusting the other party. And in this instance, with Lightning Loop, what they're trying to do is to enable people to, well, let's say you're a merchant and you get payments from people. So you started with a channel that had incoming capacity on the other side of the channel, and people pay you. Then over time, you'll have most of the capacity on your side of the channel and would be able to accept more payments. So this allows you to send money back on this one channel that you want to kind of recharge when someone else pays you back. Someone else pays you back on chain in a way that is kind of atomic. So. Yeah, and the other side can cheat you. So it's kind of trust minimizing that way. There were other ways before to do this kind of rebalancing, but it wasn't as atomic. So this is a very nice development, in my opinion. I think it's still alpha stage, but yeah, it's sounds like a great development.
Yeah, this is really interesting. Yet again, to explain it one more time, just really quickly, it does allow you to empty Lightning channels without actually closing them. And in fact, they're working now on an additional thing called Loop In, right? That allows you to put funds into to these Lightning channels without closing them. So again, guys, this is more advanced stuff working on Lightning where you don't actually have to close the channels. You can kind of keep them open indefinitely, and that will just be better for the network. So Jack, let's get your thoughts on this. Is this a pretty big development? And is this just building off of the evolution of submarine swaps? And what do you think this is in store? What do you think this means for the Lightning Network as a whole?
Yeah, so I think that Lightning is a bit mischaracterized as it stands today as a strictly consumer-facing addition to Bitcoin. I think that as Lightning starts to synergize with the chain itself and scales itself out to bigger use cases than micropayments, I think that that's a really underappreciated portion of Lightning. I think Lightning, generally speaking, it makes settlement of the asset more efficient and much cheaper. And there's a really obvious thesis that everyone should hold, that activity on top of any asset will migrate towards the most efficient and cheapest way of settlement. So I think a lot of activity is going to be conducted on Lightning, and with things like Wumbo and things like submarine swaps, both in and out, you're going to end up scaling yourself to much more ambitious use cases than what we've seen typically like on Twitter, like the y'all's articles and stuff. So I like the direction. I know Wumbo is in the 1.1 spec. This loop service is a great initiative, and I am very excited for the next chapter of Lightning.
And I think this does sort of represent at least the beginning of the next chapter of Lightning. I mean, you're talking about Wumbo, which is going to be in Lightning 1.1, which basically allows for unlimited size channels. Is that right?
Yeah. So, well, I'll draw a user story. So let's say I'm a trading desk of mediocre size, and in an ideal world, an exchange integrates Lightning, and Loop Out can help them significantly, right? Because now they can receive funds and they can dedicate whatever, whether it's a variable number or a percent variable amount of funds in a Lightning node, which is essentially a hot wallet. And then they can, quote unquote, loop out funds back into some form of cold storage to secure themselves. So now I'm a trading desk. I have exchange integration with, let's say, the top 5 exchanges. And when a client wants to do a large size trade with me, like 50 Bitcoin or something, there could be a world where they loop in their deposit from their chain wallet into my trading desk, which operates on top of Lightning. Now my Lightning enabled trading suite now is scanning the order book depth to either cross at spot with other OTC desks or execute over Lightning, and like being able to go in and out of Lightning channels and from chain into payment channels, and kind of exercising this cheaper settlement and more efficient settlement to the broader marketplace, I think it is really interesting. So I think that's a necessary step. I think Liquid was an attempt at a similar type of solution. I think Lightning will play a role initially in the marketplace of Bitcoin and in exchanges and such first, before we start to see general retail adoption, in my opinion.
Yeah, absolutely. This does play out over years, guys, and I try to keep continuing to remind my audience of that and everybody of that on Twitter, that because there's a lot of impatient people out there. It's kind of funny, but yeah, I mean, we are going to see exchanges, I believe, begin to integrate Lightning more and more, and even Liquid too in the future. We already have exchanges like Vaultoro, which is gold and Bitcoin. They don't do any fiat, but they actually support Lightning as well, being able to do trades with Lightning payments. So that's really interesting. And then I also want to point out another thing, because that this allows. I mean, according to the article, this can be used to get initial receiving capacity, which means that new recipients on the network no longer need to rely on others to even open channels before they're able to start receiving. So that, again, allows easier onboarding for the community and for the ecosystem. So that's going to be interesting. Pierre, I want to get your thoughts on this, and maybe even when you're done, if we got a minute, maybe you can even talk about BIP 157 if you think that's important.
I do think it's important, but I think it's in the bag, so I don't need to.
Oh, okay.
Yeah. So there's going to be different ways of managing liquidity for both your routing node and then your merchant node or your consumer node, whatever kind of role you have on the Lightning Network. And I think that it's the more tools we have in that toolbox, the better. Which ones are going to end up being the most popular, or the the automated solution or whatever? I think that we won't really know until we have on-chain fee pressure, because then we also need to have people become more mature with how they're managing their routing fees and their fee rates. And that's what's going to allow us to see what the economic equilibrium between on-chain transactions and off-chain payments is. So right now we have a very distorted Lightning environment and Lightning economics. So it's distorted by on-chain being 1 Satoshi per byte, and that can get you in the next block often. And off-chain is distorted by LN Big and other people providing liquidity for free, which I don't think is sustainable or necessarily healthy for the network. So I think that once those two trends somehow become either go away for whatever reason or dissipate because the Lightning Network is growing, then we'll be able to see, like, do people often loop in and out, or are they often rebalancing by routing through other channels? What is their channel opening strategy, or do they just close channels or open channels instead of looping in and out? So I think that on its face, like the economics of looping in and out are better than that of closing a channel to open another one. But where all of this is going to end up is also going to depend a lot on innovations that come out as well. So how does Schnorr impact the relative economics of on-chain versus off-chain? We'll see how that evolves. When I think about like really long term, I want to put out a crazy prediction, which is that every known UTXO, every UTXO that's actually got someone who has the keys for it, I think they're all going to end up on Lightning Network, and that on-chain transactions are going to be about closing a channel and opening a channel with the inputs and outputs respectively, and that there really won't be any other on-chain transactions other than that. So that's my like very long-term 15-year prediction of
it'll just all be Lightning Network.
Lightning Network. Yeah,
it'll just all be Lightning Network transactions.
I think that it just won't make sense to keep funds in a dumb UTXO. It'll locked up.
I think probably the only sense it would make is if for still large, we're talking multi-millions, tens of millions, hundreds of millions, and even in the billions. So we're talking around governments sort of spending. Maybe it would still make sense for them to keep some UTXOs. No.
I don't know. I think that there'll be a big opportunity cost from being able to route payments.
Very interesting, very interesting, and I definitely do see that. I try to tell people too, because a lot of people, there's some fun out there about that Lightning Network is going to take fees away from miners, right? And of course, all of us know on the panel, we know that that's not true, and I think you just explained part of the reason why. Because again, all of these additional layers, like layer 2 and layer 3, they all drive transaction activity to the base layer. So that means that everything must eventually settle somehow, right, to the base layer.
Yeah. So like over the past 5 months that I've been experimenting with Lightning on mainnet, I've done hundreds of on-chain transactions. Before the past 5 months, I had maybe done 15 on-chain transactions in like 5 years. So I think that just from I know it's anecdotal, but I think that it really does dramatically increase the amount of demand for on-chain transactions in a intelligent way. If you kind of think about the long-term value of any given channel, it certainly makes more sense than like Satoshi Dice or something like that. So in any case, I think that it's going to dramatically increase demand for on-chain transactions, and that's going to be concern trolled by quite a few people as we see a fee market develop.
Of course, and I absolutely agree with you, Pierre. I mean, and this is what a lot of us have been saying, like since Lightning almost started talking about, is that really for the past couple of years that Lightning is going to increase on-chain activity, guys, by just huge orders of magnitude once it's ready and mature and ready to go. This is the order of magnitude scaling solution that Bitcoin needed. I mean, and as Pierre said, this is how you do it intelligently, organically, and scalable. This is how you do it, actual scalable. And what also I thought was a great point, Pierre, is that we have to wait a little bit more time too for some more interesting statistics and metrics, so we can find out like how people are using Lightning, because that's really interesting. That's gonna be interesting how people are actually looping in, or if they're not using loops. Really gonna be fun to watch as we continue to optimize this network. Jack, any final comments on this topic?
Yeah, I just wanted to say that I 100% agree with Pierre's long-term outlook, and that activity I think it's very underestimated how impactful Lightning will be. So quickly, when you look historically at assets, so this general thesis that all activity on an asset class is going to migrate towards the cheapest and most efficient way of settlement. And that is not a Bitcoin thing. That's a general fact of asset classes. And if you look historically at how other asset classes scaled in markets, you look at like the OCC, intermarket exchange linkage. I mean, these are not computer science breakthroughs that like held principles of decentralization or had a lot of interesting tidbits on how to operate a network of nodes. But this was an asset class that operated in the market. And what you're doing is you're increasing the velocity of the asset. And that's what's happening with Bitcoin, is that the entire vertical of Bitcoin as an asset class is going to start to collapse. And the same Bitcoin that gets mined in a block can be the same Bitcoin a consumer can be using in seconds, when you can settle so cheaply and so efficiently. And you see this traditionally over the last 100 years in other asset classes through different clever ways. But at the most abstract level, all that's happening is we're increasing the velocity of the asset and making it much easier to settle. And that is a massive, massive deal. If you expand your time horizon long enough and ignore whatever the hype cycle is on Twitter, like accomplishing that cannot be understated. So I agree with Pierre, and I think that people should start to get in tune with Lightning. I think it's going to conduct pretty much all the activity on the asset class if successful.
Absolutely, man. Just the economics of Lightning are just going to be fascinating to me. This is going to be so impactful, highly, highly impactful. So very great comments, Jack. Thank you for that. Udi, any final things to say on this topic before we move on?
So maybe I'll attack it from another angle. So when people say Lightning will destroy the fee market, or no one will use on-chain transactions once Lightning is popular, if off-chain transactions are going to kill Bitcoin, then we're screwed either way, because there are other ways to do off-chain transactions. You can do off-chain transactions between Coinbase users or between exchange users. And people are going to do it if it's going to be cheaper. And if you think that this is what's going to kill Bitcoin, then I'm sorry. That's it is what it is. And in the same way, you can't just shut down Lightning. If Lightning works, it's going to exist and people are going to use it. And if Bitcoin can survive Lightning, then Bitcoin isn't a very great asset at the end of the day. So I don't think that's the case. I think that both Pierre and Jack had great arguments why that's not the case. But if that's what you think, I don't know what you're even doing here.
Well, great points, Udi. I tell you though, real quick before we move on, I gotta say I love the language of looping, like looping in, looping out. I love that because we're talking about like when you tell people like on-chain transactions, like and things like that. When you say it's got to loop in some funds real quick and maybe loop out to one of my friends, it just sounds awesome. I'm sorry.
You think it sounds better than a reverse submarine swap?
See, exactly. See, remember, Submarine Swap came up by Alex Bosworth, who was a developer, and I think Loop in Loop Out was probably came up by Elizabeth Stark, last I heard. So if I'm wrong on that, definitely correct me in the comments, guys. But this is really important. So the language, guys, has got to keep it simple.
I think it was Lalu. Lalu. Oh. There's like a inside joke on the Lightning Labs Slack that Lalu is the best namer of all time. He came up with y'alls. He's basically named more things that you use than you know. And so awesome. As long as there's a platform here to shout him out, he is the GOAT at naming things.
Awesome. So. Shout out to Lalu. And of course, your hard work, man, on Lightning for years and years now. Like, awesome. So thanks for that, Jack. That is absolutely cool. Very cool, guys. All right, so let's move on to the next topic. And remember, guys, if you are not subscribed to the channel, if you're new, definitely hit the subscribe button. We do new shows here every week. And if you guys want to check out the other shows, make sure to hit out the CryptoCast YouTube channel. We've been here for a little while. I used to be on the World Crypto Network, but I have since moved over here to the CryptoCast. And I think everybody's having a great time here. So if you guys are learning something, if you guys are liking the show, make sure to hit the thumbs up. That helps us get into more people's feeds. So let's go on to the next topic, guys. Looks like this one was a big one too, across the entire crypto community. So basically, there's been a new study by Bitwise that essentially says of the top 81 exchanges that they studied, only 10 are revealed to have actual volume. And this is part and parcel of a lot of these exchanges around the world being unregulated. Things like BitMEX, there's suspected to be a lot of fake volume on there. But the top 10 exchanges that they named are almost all regulated, which was Binance, Bitfinex, Kraken, Bitstamp, Coinbase, Bitflyer, Gemini, Itbit, Bittrex, and Poloniex. So according to this study, they're saying that over 95% of the volume that sites like CoinMarketCap are reporting is fake. And you know what? It's really, really not that hard to believe when we looked at when we look at previously unregulated exchanges with like zero fees. We see that the bots just trade back and forth. So this was a really interesting study. I want to get from the panelists what they think. Pierre, let's go with you first. What do you think about this? Does this make sense to you? Does this sound about right? And is this good or bad for Bitcoin overall?
I think it's 100% accurate, and I think that everything's good for Bitcoin. So it's funny because within our quote unquote crypto community, there's like on one extreme, there are people who see Bitcoin as like the most liquid asset out there. It's the reserve asset. They measure their shitcoin P&L in Bitcoin. And to them, it's like already their unit of account, their store of value, their medium of exchange. So those people are like the crypto natives. Outside of that, they're people who come from traditional finance, and they look at these volumes. They say, well, this is a highly illiquid, very volatile asset, and I think that those people are actually closer to the truth. Bitcoin is still very, very young, and we who have like seen it over the years and who think that it's like less volatile today than it was back in the day, like, yeah, on a relative basis, but it's still compared to all other assets. And I think that it just speaks to the upside potential that remains in Bitcoin. It moves on very little volume, and this data reinforces that. And really, the good thing about it for Bitcoin is that it's comparable to gold's. So gold's trading volume relative to gold's like quote unquote market cap is about equivalent to the same for Bitcoin. So that I think that shows that this measurement is accurate, and it shows that Bitcoin is not like lagging in relative liquidity or anything like that. And yeah, we'll just continue to see both numbers, volume, and Bitcoin's market cap go up in tandem, I'd expect.
Yeah,
over the coming years. Yeah.
Yep, and these guys have a website that they publish this at. You guys can check it out at bitcointradevolume.com. So check that out. They put a whole website, and they put like the top 10 exchanges that they have that are listing volume. Now, CMC, CoinMarketCap, we've known has had terrible statistics for years, but these guys are saying that essentially, CMC was saying that Bitcoin has $6 billion of trading liquidity per day, when now they're saying, now that this new report is saying that between those 10 exchanges, really it's more like 270 million. And when you look at that, that actually is more like gold, because you can see that there's the spreads are like 0.1% between all those 10 exchanges. So we actually what they found is that those 10 exchanges, the ones with real liquidity, are actually super healthy and can be used for to create an ETF, to have a secure enough price discovery to actually create an ETF. So I thought that was pretty interesting as well. Jack, what are your thoughts on this? Do you think that this is, again, do you agree with so far that this is going to be healthy? And what does this mean going forward? Are more and more exchanges going to get regulated quicker because of this report?
Yeah, well, so publicly, I think that everyone knows me as to be interested in Lightning. I think I'm even though maybe more interested in trying to help fix the exchange space. I really am displeased with it. And yes, is it healthy? Yeah. Is it even news? Not really. I had a crazy encounter. I met a market making firm in Bitcoin. I don't know how long ago this was. And I was like, wow, I'm dying to meet real market makers in this space, mature the asset a little bit. And I was like, well, what are your BIP spreads? What's your P&L, like annual return? And they're like, oh, well, it's a SaaS business. And I was like, a SaaS business? That's not what market making is. And they go, no, yeah, our actual bot just loses money, but exchanges cover our costs and pay us a little bit more to give them volume. And I was like, oh my God, this asset class. So yeah, I think it's great. I don't think this is even news. I'm just excited the same way that like we need to generally educate people on why running full nodes is important, or why like custodial wallets are risky, or whatever the trade-offs are. There's a similar education that needs to go into Bitcoin as an asset class to traditional markets and capital markets. So people, just some general transparency into the industry, what real volumes are, what real data is, because there's an education gap and a serious arbitrage there. So I think the exchange space has a lot of growing up to do. I think this is a net positive, but I really don't think it's news. If this is news to you, then you clearly just aren't trading the asset, I guess, which is not a bad thing. But
you must have either just got here or are not trading the asset.
Right.
So yeah, very, very interesting. And I try to tell people this is another, I think, a symptom of just Bitcoin being in early days. right? Like you say, we just don't have the maturity in the exchanges yet, and this really kind of proves that you can look at and see. But with these numbers, like you say, Jack, it is more healthy because it's more closer to gold, where gold's market cap is 7 trillion with a spot volume of 37 billion, implying a 0.53% daily turnover. Now with Bitcoin 70 billion market cap, with this new data, this would imply a 0.39% daily turnover, which is very much healthy and in line with gold. So that is really interesting to see. Udi, I want to hear from you. What do you think of the motivations behind people doing this? Why are these exchanges? Is it just purely for money? But well, of course. But what is some of the specific use cases you think that of why these exchanges would fake their volume so much?
So I'll start off by saying I read the report over the weekend, and I think it's a great report, and I recommend everyone watching it to give it a read, at least go over the bullet points. I really like that. I agree that it's not a surprise, and anyone could take a quick look at CoinMarketCap and says, okay, the first 20 are fake, but the methods that they used and the way that they presented the data, I think that a lot can be learned and gleaned from that. So to your question, I think that, and that's what the research is saying as well. I think the one very good reason for them to do that is to try to push their exchange as a solution for listing new shitcoins. So if someone's doing an ICO or doing a new shitcoin and they want to list their coin somewhere, then they can, charge a very high listing fee if they're at the top of CoinMarketCap. And a lot of times you don't care about. Imagine that you're a shitcoin issuer just for a moment. So, a lot of times the issuer themselves don't care if the volume is real or not. They couldn't care less. What they want is to convince their investors that the coin is getting listed on an important exchange. And we already know that their investors are going to believe anything pretty much. So if they see something at the top of CoinMarketCap, they're going to believe it, and that's going to drive investments into their coin. So that's probably the top reason. Another one is that someone wants to trade and has no idea what they're doing. They'll probably choose the one that looks like it's the top volume. But yeah, I think that one thing that's very interesting about the research is, it said, the headline is 95% or so of the volume is fake, but the research itself is very positive. The tone is positive too. I mean, yes, a lot of it is fake, but we all knew that. But it seems that on the non-fake exchanges, things look really good. The spreads are very, very small. Liquidity is pretty good. The prices are very similar across exchanges, across all days of the week and all times of day, and also they say a lot of things that probably most of us already know, but they talk about how prices on Bitfinex or on Tether exchanges seem like they're higher, but they're actually not higher because Tether is just priced lower than $1. So most of it is really good news, and it can be served. If you're just following the space and not actively participating, maybe if you're a journalist covering the space, I think it's very, very important to read this and understand what's going on there, because it's going to help you when you cover this stuff and when you talk to people about this industry.
Absolutely, and this is kind of funny to think that this research done on these exchanges has only been done now. I mean, everybody in this space, like we've been telling you guys, pretty much knew that most of the volume was faked, but nobody's actually ever done the research across 80 plus exchanges to go in and see this data. I mean, so I just want to say talk about the two main ways that this research team from Bitwise did this real quick. So the first test that they did was the trade size histogram, right? So real exchanges have more trades of small amounts than of large amounts. So with spikes around, like one Bitcoin, which is really interesting. But the bad guys, of course, the fake volume didn't, right? So they did not have their trades were all over the place. It was crazy. Then the second test was the volume spike alignment. So real exchanges have volume spikes that all align pretty much perfectly. So if you see Bitcoin go up like $100 on Bitfinex, you better see that freaking thing go up pretty much on Kraken, right? And so this is what we've seen. Those 10 exchanges, they all have this, but all the other exchanges, this fake volume, they have random ass times that they start spiking. So you can really start to see, just from those two main tests, you can really start to see a lot of the exchange volume, a lot of these these exchanges kind of fade away. Their fakeness revealed really, really easily just from those two tests. So that was pretty interesting. All right, guys, I think we can go on to the next topic after that. And just real quick to recap, Udi, like, what Udi said is that one of the main reasons that these people do this to fake their volume is, of course, profit, but to attract new coin offerings. So they want, because they can charge millions of dollars, guys, just to list a coin, which costs them almost nothing to just add a new, click a new button in a database, but they charge millions of dollars for that. So that's one of the main reasons. And of course, it is to just attract traders, because the traders like to go where the volume and where the liquidity is. So with that aside, let's go on to our final topic. We're doing pretty good on time. All right, cool. Got 20 minutes left or so. So this is a pretty interesting topic, guys. This one took the Twitterverse by storm, I guess you could say. I mean, pretty much everybody in my timeline was talking about this. So let's go with this one. The CEO of Square and Twitter announced a new venture called Square Crypto to work full-time on open source contributions in the Bitcoin and crypto ecosystem. So this is pretty cool because, guys, so many companies out there, even Fortune 500 companies, benefit from open source projects, and very, very, very little of them actually give back and contribute to open source. I just want to give a shout out to some of the big companies that are doing that right now, which is the two big ones, is Blockstream and Chaincode Labs, right? These guys both employ open source developers, and from the things that I hear too, like a Chaincode Labs, I mean, this takes time, guys. Like, whenever they hire a new developer, it takes them six to 9 months before they even start like their first pull request, because this is how difficult it is and how much work has been on Bitcoin, 10+ years. So this isn't easy stuff, but there are companies that are willing to contribute back, and I just wanted to shout out those two. And now we have the Twitter and Square, right, doing this. So this is really cool. I hope to see more and more companies do this, because again, they benefit so much from open source. So Udi, let's go with you first on this one. What are your comments on this? Because Jack said he started with the idea of we need to pay people to make the crypto ecosystem better, right? We need to start paying more people, and especially in the open source. So I want to get your thoughts on this. What do you think about this, and what do you think the impact will be of this?
So I guess what I think is, like, Square Crypto. What kind of name is this? What's crypto? No, I'm kidding. I think it's a great initiative. Anyone can say that, right? I think it's a really great initiative. I think it's great they're doing this. I can't think of one negative thing to say about this. The only thing I can say is that I hope that a lot more companies will do the same. And by the way, you mentioned Blockstream and Chaincode Labs, who are doing amazing work. And I guess we should also mention, companies that maybe sometimes we mention in other ways, like blockchain.info, which is hiring one full-time core developer. And I think Coinbase used to. I don't think they do this right now, but
they had one,
yeah.
and that let go.
Yeah, but I mean, so but yeah, I hope that a lot more will do this. Jack Dorsey, what can I say? I am obviously a fanboy. I think that a lot of us are, and I think that it's just great that they're doing this. I don't have much more to say about that.
Yeah, I mean, and again, this, just to be clear, this is from Square. Not from Twitter. Of course, Jack is the CEO of both, but this is from a contribution from the company Square. And it's really interesting to see, because they actually admitted, and most companies won't even admit it, but they admitted that they didn't give enough back to open source, because they know they're benefiting off of that. So that was interesting to say. Pierre, what are your thoughts on this? Do you think that the industry does enough to hire open source developers, or do you think this can trigger more people doing it? And do you even think that it's a bit of a problem right now?
I think that more companies would hire more open source contributors if they kind of addressed their own like self-limiting beliefs about it. So for example, like one thing I've heard from companies is, well, we don't want to seem biased towards Bitcoin by hiring someone who's working on just Bitcoin, because we trade a lot of different assets. And so like my response to that is, look, if there's a problem with Bitcoin's protocol, that affects this entire space, and everything is highly correlated. So every shitcoiner should be delighted by every line of code that gets added to Bitcoin Core. The other thing too is that if we look in terms of software engineering professionalism and kind of the open source like depth of contribution that's happening to different projects, like it makes sense to me that a Fortune 500 company, a large VC funded company, would focus on the project that has the highest engineering standards, where the person that's contributing to it is going to be able to learn the most. Now, granted, there are plenty of other open source projects, and it's not like I don't think that Jack's only going to hire specifically for Bitcoin Core contributions, but generally speaking, for the Bitcoin ecosystem, it makes sense that you would want them working on the open source projects that are going to have the most impact. And right now, the projects having the most impact are, obviously Bitcoin Core, but also BTCD, the Go implementation, which then feeds into LND and helps in that area for the Go ecosystem within Bitcoin. And then obviously the C Lightning implementation that's being created primarily by Blockstream, but also from community open source developers. And then BTC Pay Server, which has no real corporate backing. Nicolas Dorier created it from scratch after BitPay revealed themselves to be less than honest. I mean, they were going to have people run non-functional hard fork code and pretend to call it an upgrade to Bitcoin. So Nicolas created BTC Pay Server out of that, and it has quickly emerged as the certainly the most active open source commerce platform for Bitcoin. And they have just gotten tremendous traction. Part of it was a very smart move by Nicolas, which was to make the API for BTC Pay Server entirely compatible with BitPay's API. So it was a drop-in replacement for merchants who are using plugins on WordPress or whatever other e-commerce platform they're using. So in any case, like all of these projects have the best product market fit and traction, and there are many more. I'm really just listing the ones that I think are like in the top 3 or 4. But they could all benefit from additional open source contributors. And we know that lots of people are depending on the software in a decentralized manner. Everything that I listed is non-custodial, and it's very in line with the philosophy that which Jack finds so interesting about Bitcoin, right? And he's been very clear about that, is that the decentralized nature of Bitcoin is what's interesting. So yeah, that's my spiel. I think it's fantastic, and I think that there's just a lot of different projects that could benefit from additional corporate funding, but also just any kind of funding, personal funding, and then the most important asset for any open source project is the time of the volunteer contributors. That's the biggest contribution they all get. It eclipses any monetary contribution that pays for the kind of the core contributors that are paid to work on it. So I think that we have to applaud all the volunteers who spend time outside of their main gig or in between gigs or whatever their situation is, and who for free create software that is immensely useful for us and is helping Bitcoin and Lightning entirely replace the corrupt fiat banking system.
Yeah, and there's a lot in this ecosystem, as you say, Pierre, to be able to contribute to invest in. There's a lot of developers even that work on BTC Pay Server that would love to, like you say, that would love to be able to have some extra funding, because they work on this stuff all the time and they do it on their free time, right? So this is just really great to see. This is why we think it's so important for more and more companies to contribute to some of these open source developers. But I do want to address a lot of the concerns in the chat and things that I've seen across Twitter. They're like, yeah, but Jack is censorship, Jack is Twitter, Jack is censorship. Blah, blah. But the thing is, guys, look, well, if you know Jack's history, you know that he grew up and found the internet early. He found cypherpunk, the ideals there. He found that attractive early. So Jack is not about censorship. I guarantee you he is not happy with this censorship. I mean, he has an additional company called Square. And remember, he even said for Square, he says, Bitcoin is aligned with their goals to create a, quote, more accessible global financial system for the internet. Because Jack is all about the internet. He's not all about Twitter. Yes, he's the CEO of Twitter, but I guarantee he's not super happy with that censorship. And if he can, through Bitcoin, create something even better or more fair or something that that can't be censored, then I guarantee you he's going to try to do it. This is because he has those roots in cypherpunk. So Jack, I'd like to have you.
Can I quickly jump in?
Oh, please, Udi, please.
Yeah, sorry. While I agree with you, I think that it's healthy for anyone to suspect and be suspicious of anyone in the Bitcoin space. I think it's great. If you don't like that Square is putting aside some capital to fund Bitcoin developers, then you're welcome to do the same and allocate some capital to help Bitcoin developers out of your own interests. And I think that the more people we get that will do this, it's better for everyone. If you don't specifically like Blockstream because you don't like MasterCard and AXA and the Bilderberg Group, I mean, that's fine. Maybe you have a problem, but that's fine. If you don't like Jack because I don't know why, good for you. So just allocate some of you or find someone else who can do it. We need as many companies and as many entities do that as possible. And
what's also hilarious is that they think that like Jack is Twitter. They think that because some of the censorship that goes down on Twitter, that Jack supports all of that. By default, it's like, people, come on, stop tying Jack to an entire company where censorship is well out of his control. They have multiple departments that deal with that have all sorts of rules and things that they have to go through. Jack doesn't sit there on a day-to-day basis and look at everybody's tweets, guys. Jack doesn't sit there and personally censor your tweet. Okay, that's not how it works. So again, do a bit more research, guys. It's kind of ridiculous to throw around stupid accusations like that. Jack, I want to hear your comments on what we've been talking about so far and about this initiative. What do you think?
Yeah, so I don't want to repeat too many points, but I just find it really refreshing, honestly, to see really simple and sound logic applied. It's like Square's clearly positioning themselves as pro-Bitcoin, friendly to innovation and payments. And like, what's the easiest, simplest way to be helpful is to help contribute to the most important parts of the software. I mean, they could have easily like put together a lap or something, like a micro payment book or something, and it would have been cool. And a lot of companies are trying to get sound bites and press from similar projects, but not as efficient and helpful as if you were to fund 5 engineers to contribute to Bitcoin Core, for example, or implement a new BIP, or take care of BTCD, to Pierre's point, whatever it is. So I just thought, I mean, the fact that we haven't seen this and that this is an accomplishment, I mean, it is big ups to Jack. It is also like, I am dumbfounded the industry today and how they carry themselves, folks like Coinbase. And so, yeah, I just my takeaway is like how refreshing. Someone with a lot of money that wants to be helpful. I mean, it's really not hard. It's a software project, and there's smart people that could need some funding. So I found it really refreshing. I'm happy that someone with power and money and resources is being intuitive and logical.
Yeah, I love his reasoning, right? Like you say, Jack, it's refreshing to see decisions based on logic. Like he clearly eschews altcoins because he sees the bigger picture, and he even says this with logic. So very interesting, backs this up basically, in my opinion, with logic. So very, very interesting. And it's funny, like everybody in the panel has already said, guys, if you don't like Jack funding Bitcoin, why don't you put your money where your mouth is and hire a developer yourself, right? Like that would be great. If you don't like the way Jack or Blockstream, you don't like AXA, well, then go ahead and then start a company and fund your own developers. Because guess what, guys? Bitcoin is decentralized. The only actual decentralized public blockchain at scale. So this is how it works. And I'm really just happy to see just the recognition from Jack to these open source developers. Again, he admitted that their company didn't even use as much didn't contribute to open source as much as they should. No company even admits that, let alone actually contribute. So I'm hoping that this will spur more and more companies to please do this, because hey, it's going to make your company look good. It's good for PR. It's good for the Bitcoin. It's good for the ecosystem. It's good for the price. It's good for the developers. So this is what we're going to see. And now the beautiful thing about Bitcoin is that, well, it's been appreciating, right, over the past 10 years, pretty good. So we've actually seen some developers in Bitcoin actually have FU money and don't even need to be funded. So that is really great to see too. Yeah. And that's really sorry, Pierre, did you have one last?
Yeah, one last thought on that, which is like another like reason that I hear from companies that they're not sponsoring someone is they're like, well, we don't know who to sponsor. Like we don't know what to do, and it's very simple. go to Chain Code Labs, go to Blockstream, go talk with a lot of the Bitcoin core contributors who are like quite a few of them. I'd say at least half of them are on Twitter. And you can just tweet at them and be like, hey, can we discuss privately like who you think has been contributing to whatever open source projects around Bitcoin that you think is hugely valuable? And then just start evaluating like what it is their contribution. Like, do you agree that this is valuable? Does it have product market fit? All of these questions, how many stars does it have on GitHub? Like stupid stuff. Like obviously, don't target a metric, otherwise people will game to it and it'll become a popularity contest. But I think that like that excuse is very thin. Everyone is so open and accessible in Bitcoin that you can go talk with a dozen people and you'll have a dozen names in common that then you can go and ask them, hey, what's your current funding situation? Would you be able to contribute more if you were funded and working on this full time? Like, is this a side job for you, etc.? And like just have open, honest conversations, and that way you can accelerate the development of the ecosystem.
Absolutely. Great points, Pierre. And I just hope that more and more people start doing this, start becoming active, because again, guys, there is hundreds of millions, if not billions of dollars of profits that these companies, these Silicon Valley companies, are making from open source software. And so we really have to remember remember to support these developers. And now that we have open source development that actually equates to money in the form of Bitcoin, it's all the more even important. So really, really great points, guys. Let's go.
Maybe one more thing on this.
Oh yeah, please, Udi, go.
Yeah. So another thing, a company can do this in an altruistic way, but it can benefit that company too. It's not just to support the development community and so on, and to support Bitcoin, because if you think back to SegWit2x, I think if you talk to some of these businesses that supported SegWit2x and you ask them why did they do it, I think some of them would say, because we were feeling left out. We were feeling like we're not involved in the process. We're feeling like decisions were being made without us. And the reason decisions were being made without them is that they were not involved in the development process, and they were not involved in the technical discussion at all, at no point whatsoever.
And by that, real quick, but that means that they did, by when you're saying that, Udi, that means they didn't involve themselves, because this is all open communication. So when you mean that, what you say is they didn't actually take the time to involve themselves in this open discussion.
Exactly. They did not involve themselves. And the way to involve yourselves a great way to involve yourselves is to find one of these developers and just help them, help you understand what's going on in the process, what's going on in Bitcoin development, what's going to happen in the future, no one knows what's likely to happen in the future. And, this synergy can really help the business. It's not just about being, contributing to the community, which is important, but it's not the only benefit you're going to get from it.
Absolutely. Well, let's ask Jack then one final time if you got any final comments, since the other panelists put in their final comments. What do you think, Jack? Final comments on this topic before we end it.
Yeah, well, the last thing that I think is also important is competition is such a good thing. And it creates much more efficiency in solutions. And so I'm really excited to have some contrast against people like Coinbase. For the longest time, they played bully ball, essentially. None of their ill-advised decisions carried many consequences, to be quite frank, at least to the size of their ill-advised decisions compared to what could be considered consequences. So I'm just really excited. Like, it's clear Jack Dorsey is going to allow you to buy and sell Bitcoin. It's clear he's going to let you store it. It's clear he's attacking commerce and general consumers. So Coinbase, the next hard fork proposal, or shitcoin, like, be my guest. I mean, I honestly don't think that if Coinbase could live the last decade over again, I don't think they could possibly have fucked things up as hard as they already have this time. It is an impressive showing of incompetence and stupidity. And so I'm really excited, just for some contrast, to be quite honest with you, just so that someone can look at one side and go, oh, that's black. Well, what's white? What's the other side look like? And I think that type of competition and holding people accountable is a nice side effect here. Because, I mean, Jack Dorsey clearly has an incentive to do things like this. He is not just, this isn't like a grant. He's building a brand of his own. He's building a company of his own. He's
a profitable company of his own.
Correct. Yeah, he's acquiring customers and users, and he's building a brand. And a lot of this is very strategic on his part. And so I'm very excited for him to step in the arena with some of these other people who have essentially been bullying Bitcoin users for the larger parts of our Bitcoin lives. So I think it's part of the growing up process.
Such a great point, Jack. I mean, because we've had these companies like BitPay, like Coinbase, just essentially, like you say, bully the ecosystem because of their numbers, and they absolutely made horrible, terrible decisions for the Bitcoin ecosystem over and over and over again. Then we have Square Crypto. The only freaking person they follow was Hal Finney. I mean, that is just a huge contrast to what we've been subjected to in the ecosystem so far by these companies like Coinbase, BitPay, blockchain.info. So just to have Cash App as a competitor is absolutely awesome in the Bitcoin ecosystem. And remember, they are killing it, dude. They have sold millions and millions of dollars of Bitcoin in 2018. They are going to become a major competitor, if not already a major competitor to Coinbase. So I'm looking forward to that as well. So great points, Jack. All right, guys, I think we can end it here. I really hope everybody had a good time. Hope everybody learned something. I had a great time myself. Thanks to everybody in the chat. Thanks to everybody, all the panelists as well. We had a lot of great discussion in the chat. Jack, why don't you go ahead and tell us where we can find out more about you, sir?
Yeah, I'm on Twitter. It's just my full name, Jack Mallers. Hang out on a lot of Slacks. Likely I'm on, I can't even keep up at this point. The Telegram and Slack combination just kills my phone battery. But likely if you're on Slack, I'm probably there. So yeah, just catch me on the internet. Thanks for having me, buddy.
Yeah, man, awesome. Like for me personally, like I'm in a bunch of Slacks, but to the point to where the only thing I use Telegram for is work. Like I don't actually even want to have multiple social interactions, but it's with all of these platforms, but it's crazy how many platforms we have to keep up with now. But yeah, man, so glad to have you back on the show, Jack. Thanks so much, man, for coming on. Your knowledge was in both finance and Lightning, of course, is always appreciated. So thank you so much. Mr. Pierre Richard, I don't even really think we need to find out where more about you or find out where to find out more about you, but go ahead, Pierre. Let the world know where we can find you.
Yeah, sure. So I have soft launched a inbound capacity request feature for Lightning Power users, and this is competing with Loop, but basically you pay me to open a channel with you, so you have capacity. It's very similar to Bitrefill's Thor product, and it's just a much easier version of what I previously had, which was a Google form that you submitted your pub key in, and then I manually went and opened a channel for you. So this is all automated. It's in beta, so be gentle with it. And if you encounter a problem, please scream at me on Twitter and call me a scammer or something. So you can find me on Twitter at Pierre_Rochard. You can go get inbound capacity at lightningpowerusers.com.
Absolutely, man. So many good projects you listed there. I mean, so much work being done, guys, in the space to address these problems. Thor, Loop, Pierre's got a solution. It's just crazy. And of course, guys, make sure to check out Pierre's node launcher. He has a great Medium post on it that he keeps updated for new people to get into this. So really, really great. Thank you for that, Pierre. Awesome today on the show as usual. And finally, Mr. Udi himself. Udi, where can we find out more about you, even though you seem to spend the majority of your time on Twitter?
So there's no need for any of the viewers to try to find me. I mean, it's a waste of time. Go download the node launcher from Pierre Rochard, install it, and join the Lightning Network. If you have to, you'll have the link to my Twitter account on the description.
Absolutely, yeah, guys. Just don't even worry about the panelists. Just go right to Pierre's node launcher and Jack's Zap wallet, and you're good to go. So again, guys, thanks so much for joining us. We really appreciate it. Again, contributing your time, guys. I know I appreciate it, and I learned a lot. So thank you so much. We're going to be back again, of course. Every other Sunday, we do this show, the Bitcoin News Show on the CryptoCast Network. So until next time, guys, please keep talking Bitcoin. We'll see you later. Bye-bye.